Something big has just dropped, and it's not just the crypto market. Last night, Donald Trump went on record threatening to send US troops into Nigeria, and within hours, the global markets, including crypto, started to wobble. Bitcoin has fallen to around 107,000 US dollars. Ethereum has slipped to 3,700, and XRP has dipped towards that $2.39. Now, a lot of people are asking, what's the link? Why would a geopolitical threat in Africa cause the global crypto markets to bleed? Today, we're going to break that down. I'll explain what Trump said, why he said it, how geopolitics impacts markets like crypto, and finally, what you should be doing right now to protect your capital and prepare for the next big reversal. Let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So, what exactly did Trump say? The US President Donald Trump made a statement that sent shockwaves through global media. He claimed that Christians were being targeted in mass killings in Nigeria, and that if Nigerian government didn't act, the US might go in guns blazing. Those were his exact words. Now, the Nigerian government immediately rejected that narrative. They said the situation is more complex, that the violence isn't based purely on religion, and that any foreign military intervention would violate their sovereignty. But the damage was already done. When a sitting US president talks about deploying troops, even hypothetically, it sends an instant chill through the global markets. It doesn't matter if it's Nigeria, the Middle East, or Eastern Europe. Markets react the same way. They go risk off. Investors pull money out of volatile assets. Hedge funds start trimming risks, and crypto, being one of the most volatile markets on earth, usually takes the first punch. Why would this specific threat matter? Now, you might be thinking that Nigeria is not exactly a crypto powerhouse. So why would something happening there affect Bitcoin, Ethereum, or XRP? And it's a good question. It's not about where it happens, it's about what it represents. When a superpower like the United States even mentions military involvement, it signals potential instability, global uncertainty, and traders react fast. Markets hate uncertainty. That uncertainty ripples across every asset class, stocks, commodities, bonds, and yes, crypto. Remember, even though crypto was built as a hedge against traditional finance, in practice, it still trades like a high-risk asset. When people are scared, they don't hold risk, they sell it. So when headlines like USA threatens to send troops to Nigeria, when that hits the wires, big money instantly moves to protect itself. That's why you saw the red candles start stacking up across the board. Bitcoin dumping from 111k down to 107k. Ethereum breaking below the key support at 3,700. And XRP is testing that 240 region all over again. It wasn't just crypto. Global emerging market bonds, oil, equities, it all took a hit at the same time. This is a classic risk-off rotation, and it happens every single time geopolitics flares up. Let's zoom out a bit and understand how these dots connect. Every market, whether it's stocks, Forex, or crypto, react to one thing above all: confidence. Confidence that the world is stable, confidence that money will retain its value, and confidence that the future is predictable enough to invest in it. When something like this happens, when a global superpower threatens to use force, that confidence gets shaken. And that shaking doesn't just hit governments or institutions. It trickles all the way down to individual investors like me and you. Think of it like this. Oil traders worry about supply routes. Bond traders worry about debt stability in emerging markets. And stock traders worry about corporate profits in times of uncertainty. And crypto traders worry about liquidity and risk appetite. Crypto is almost always the first to react because it's 24/7, unregulated and sentiment driven. How people feel massively affects the price. When global risk perception or worry spikes like it has just now, you'll see mass liquidations, forced unwinds, and a cascade effect that exaggerates every move. That's why something like XRP doesn't just dip 1%. It can drop 5 or 10% in just hours. But here's the dirty secret most people do not realize. The crypto market today runs on leverage. When Bitcoin moves 3%, that's enough to wipe out billions in over-leveraged long positions. And once liquidation cascades begin, The algos do the rest. One major move triggers the next. Stop losses get hit, funding rates flip, and before you know it, your screen looks like a bloodbath. So yes, the headlines that triggered this risk-off event was Trump's statement about Nigeria. The mechanism that caused crypto's sharp fall was excess leverage and unwinding. It's the same story every single time. The market just needed a spark. And this time, geopolitics provided it. This is the part where experience counts. When markets are shaking like this, there's only one thing you need to focus on, which is risk management. You can't control the headlines. You can't control Trump. You can't control macroeconomics, but you can control your exposure. Here's what I recommend and what I personally do in times exactly like this. Don't over leverage. If you're using margin or derivatives, scale down. The volatility right now means even small swings can blow out your position. Keep your stop losses tight. If you're trading, know your liquidation point before you even enter. If the market breaks structure, get out. Don't try to be a hero. Don't chase green candles. The volatility will shake you out. Do not FOMO into small rallies thinking it's the bottom. And protect your capital first. The goal isn't to catch every move. It's to survive every phase. Remember, there's always another trade. There's always another setup. And there's always another cycle. Now, here's the good news. Every shakeout, every panic, every crash eventually will create you opportunity. Markets move in cycles. Fear, panic, accumulation, growth, euphoria, and then back again to the beginning. Right now, we're somewhere between fear and panic. When you start to see signs of stabilization, like Bitcoin reclaiming the key levels or the funding rates resetting and the volume drying up on the red candles, that's often the start of the accumulation. That's when smart money steps in quietly, not with 100x leverage, but with a slow dollar cost averaging. Now, if you believe in the long-term story, which I do, those moments of fear are the best times to build positions in Bitcoin, Ethereum, XRP, any of the large caps. Not the hype tops when everybody's euphoric, but the quiet bottoms when everybody is scared. For me, that's the Wolfpack way. Patience, precision, and discipline. You need to play the long game. Now let's zoom out again just for a second. Crypto has survived worse. We've been through bans, collapses, regulatory crackdowns, and multiple bear markets. Every time the same pattern repeats. The weak hands leave and the strong ones build and add to their positions. This moment, as painful as it might feel today, is part of that process. It's a filter. It clears out leverage, resets expectations, and gives builders time to create. So while the media screams, crypto crash, remember, this is what the early stages of the next rally look like. The storm always comes before the sunshine. For me, I'm staying calm, staying liquid, and watching for signals. If I see Bitcoin stabilize in around 105,000 to 107,000 range and start reclaiming that 110, I'll look at scaling in small. For Ethereum, I'm eyeing that 3,600 zone. For XRP, anything around that 230 to 244 looks like early accumulation territory as long as we don't break lower on volume. But every position I take will have a tight stop and a clear plan. This isn't the time to gamble, it's the time to prepare. Because when the market turns, and they will, the people who planned in fear are the ones who profit in greed. One last thing. Fear spreads faster than facts. You'll see content creators panicking today. Mainstream media headlines screaming crypto meltdown and people dumping perfectly good positions. But as history shows, these moments are usually when smart money accumulates quietly. If you've done your research, if you understand your projects and you believe in the technology, then zoom out a bit, relax. Let the noise shake out the weak hands, not you. So to sum it up, Trump's threat against Nigeria created uncertainty. That triggered a risk-off reaction across global markets. Crypto, being the most volatile asset class, took the brunt of it. But underneath the panic, opportunity always forms. Stay cautious, stay disciplined, and remember, volatility isn't the enemy. Emotional decisions are. Emotional capitulation is your enemy. If you want to learn how to navigate markets like this with a strategy and structure, you can join our trading community, the Crypto Wolfpack. The link is in the description, or you can head over to milkshakematty.com and find all the details there. We trade together, we learn together, and we stay ahead of the chaos. And you know what? It is a great group of people that are now fast becoming friends. Because in the wolf pack, we don't fear the storm. We hunt it. And if you're not subscribed, then hit that subscribe button, hit that like button, and remember this. If you're feeling a particular way today, remember, it's because of the fear that's in the market. Relax, zoom out, turn your devices off if you need to, but do not capitulate. Do not let your brain take you to a place where you panic, because people that panic lose money. And we're not in this game to lose any money. Remember this, the strength of the wolf is in the pack.